Have you ever looked at the news, seen a billionaire's net worth just explode by billions in a single year, and wondered, how do they legally pay almost nothing in taxes? Well, it's not some elaborate scheme of hiding money on a secret island. It's a financial playbook, and it's so clever it lets the ultra-wealthy use their fortunes without ever writing a check to the taxman. We're about to break down that exact playbook, step by step. So let's just get right to the heart of it. Let's say your net worth goes up by $1 billion. How do you actually use that money, to buy the super yacht, the private jet, whatever it is, without giving a massive piece of it away in taxes? It sounds impossible, right? But that single question is what this whole strategy is designed to solve.
Okay, to get this, you first have to understand that there are two kinds of wealth. First, you've got unrealized gains. This is wealth on paper. Your stocks go through the roof. Great, but it's not cash. You can't spend it. Then you have realized gains. This is what happens the second you sell that stock. The moment you turn that paper wealth into actual money, bam, the tax clock starts ticking. And that leads us to the big problem for the ultra-rich. If you're sitting on billions of dollars in company stock, the only obvious way to get cash is to sell some of it. But selling triggers a huge capital gains tax bill. So the very act of trying to access your own wealth comes with this giant financial penalty. You need money, but you really, really don't want to sell. So, what do? This is where it all gets really clever. There's a totally counterintuitive move that lets them sidestep the entire tax system. So what is this secret play that unlocks all that wealth without selling a single share? And here it is, the number one rule, the principle that this whole thing is built on. It's so simple. Don't sell, borrow. Instead of cashing in your valuable assets that are growing every year, you use them for a completely different purpose. And the key that unlocks this whole thing is something called collateral. We all kind of know what this is. When you get a loan, you have to offer the bank something as a guarantee, right? For a billionaire, their massive stock portfolio is the best collateral in the world. They pledge those stocks to the bank as security. This brings us to the infamous strategy. They call it buy, borrow, die. It really is just 4 simple steps. 1, you need money to live your life. 2, you walk into a bank and you use your stocks as collateral. 3, the bank is thrilled because you're so rich and the collateral is so good, they give you a huge loan with a super, super low interest rate. And step 4, you spend that money, that cash, and it is completely tax-free. And don't worry, we're going to get to that last word, die, in a second, because that's the final and most genius twist. So why is it tax-free? Well, here's the magic trick. It's the one line in the rule book that makes this all possible. A loan is not income, it's debt. The tax system is built to tax gains, not liabilities. So when millions of dollars from a loan hit your bank account, the IRS doesn't see it. It's invisible. All right, I know what you're thinking. This is the question everybody asks. It's a loan. You still have to pay it back someday with interest, right? How do you deal with that without eventually having to sell your stocks, which is the whole thing you were trying to avoid? And this is the masterstroke. You just don't pay it back with your own money. See, while you were living off that first loan, your stocks, your collateral, they kept growing in value. So when it's time to pay up, you just go back to the bank, show them your even bigger portfolio, and take out a new, bigger loan to pay off the first one. It becomes a perpetual cycle. You're just rolling the debt over forever. I mean, just look at the math here. It's a complete no-brainer. On one hand, you have capital gains taxes, which could be hundreds of millions, maybe even billions of dollars. On the other, you have the interest on the loan, which is tiny in comparison. You're not just saving a little money. You are avoiding a tax bill that is, for most people, an unimaginable fortune. So let's recap the payoff. You get to live off millions in tax-free borrowed money. Meanwhile, your real fortune, your assets, keeps growing untouched. You avoid billions in taxes. And the cycle can just keep going your whole life. But now for the final move, the die in buy, borrow, die. When you pass away, your heirs inherit those stocks at their current market value. It's a loophole called the step-up in basis. They can then sell just enough to pay off all the loans, and they'll owe almost no capital gains tax. The tax bill for decades of growth, it just vanishes, wiped completely clean. Which leaves us with one last, pretty stark question, doesn't it? If your assets are growing way faster than the interest on your debt, and that debt and all the taxes that should have come with it can be legally erased the moment you die, do you ever really have to pay it back? And is this really a tax system that works for everyone?